Good morning. Welcome to the midweek edition of Business Morning here on Channels Television. I'm Ini John McQuarrie, always excited to have these business conversations that are relevant and very current. So let's start off with what's going on in Nigeria. We see that the Securities and Exchange Commission says it has recorded a surplus of 2.5 billion naira in the first half of 2022 after 3 years of deficit. The Director General of SEC, Mr. Lamido Yuguda, made this known at the 2022-2025 medium-term expenditure framework session with the House of Representatives Committee on Finance. He adds that the Commission had projected an annual deficit of 1.6 billion naira for 2022 earlier this year after the COVID pandemic that affected its operations. Also, the SEC says that it had reduced its workforce by 30% because of huge personnel cost burden, and the move has assisted the Commission to boost its profitability. And still in Nigeria, we see that the National Biotechnology Development Agency has entered into a partnership with the Moroccan government for adoption of technology fertilizers, for biotechnology fertilizers, which is expected to boost food security in the country. Speaking at a meeting in the Federal Capital Territory, Abuja, the Director General of the agency, Professor Mustafa Abdullahi, explains that the latest collaboration also covers areas of regenerative medicine, immunotherapy, and vaccines.
To deploy to Nigerian community. And this stem cells regenerative therapy is already an established protocol, established research that is ready to be deployed. And our scientists and researchers have already keyed into it with skills and training that we are going to promote this technology and be deployed into the country. Another area that we are collaborating with the company is on water treatment. We all know that a clean water is the beginning of clean and healthy life. And that is why we are engaging with the company to deploy the technology, using biotechnology, to have a cleaner water for drinking and other domestic usage. Another area that we are working with the company is the deployment of biofertilizer. We have researches that we have different types of biofertilizer that we developed here in NAFDA. And they have brought their own that they developed in the Rahat Global Company. So we are working together to see how we deploy this quality biofertilizer to the Nigerian farmers. And very soon, it is going to be available to the farmers. Another area which is very important, Nigeria is oil-producing country, and there is a technology that is modern in cleaning tank farm.
So that biofertilizer would actually go a long way when we talk about food security and all that. So we do look forward to that and hope that we'll see it, as he has said, in a short time, very soon. Well, there's also this issue that I have been longing to talk about, to say the truth. It's about China, the world's largest bilateral lender and the second largest creditor after the World Bank. It has announced that it will waive 23 loans to 17 African countries under its Belt and Road Initiative. Remember, Nigeria is a beneficiary of this initiative. Well, a little bit of background. Reports have it that about 50 developing countries owe China debt worth about 17% of their GDP. Of those 50, 12, like the Maldives and Democratic Republic of Congo and Niger, owe at least a fifth of their nominal GDP to China in loans. In Nigeria's case, as of September 2021, data from the Debt Management Office revealed that Nigeria's debt to China topped $4.1 billion. You want to wonder what it looks like now. Well, will Nigeria make the list to be forgiven? Or what are even the terms? We do know that when it comes to China loans, getting to see the terms can be pretty hard. But the good thing is that STARS has carried out research on China loans, and some of those things we don't get to talk about or see easily. So we have Gbemisola Alonge. She's a senior development analyst with STARS now to share those findings with us. Hi, Gbemisola. Good morning.
Hi, Ini. Thanks for having me.
I must tell you that I'm personally so happy to talk about this because we've heard a lot about China loans. We don't know the terms and the condition. And then sometimes we hear of the threat or they're going to take over a facility or in a country, So STARS, please tell us, what have you found about the terms and condition of China loans?
So first thing I'd like to acknowledge or just state is China, whenever we hear of Chinese loans, it's very hardly, it's almost never that it's the Chinese government giving a country loans. So it is usually loans through banks, through credit finance companies, through multilateral organizations. So for instance, if you hear China is giving out loans, it's most likely from the China Export Import Bank or the China Development Bank and things like that. So just like these banks and these organizations act just like every other, development bank in any other part of the world or any other, credit trade organization or any other financing company, really. So for them, most times, these loan agreements are usually private, right? And even for most, even Western creditors, right, the terms and conditions of the agreements are usually private. Now, best practice is that they actually, inform the country and disclose as much as they can, things like the existence of the loans. I mean, people in the country should know that the country has taken loans from China. They should also know how much these loans are. They should know what the terms, like what happens if you're unable to meet your debt agreement, if you're unable to pay as when due. These are the things that should be made public. However, there are situations where they are not, right? So there are situations where some countries do not even know, like people in the country do not know that they have taken on loans. But then this happens based on who the creditor is. So if it's a private organization. So although, like I mentioned before, that there's some Chinese creditors that are very popular, the China Development Bank, Sinosure, and some other China Export Import Bank, but then they're also unofficial private lenders. So someone wants to build a road in a particular part of their country, and they get funding from a private organization in China. But it's not really, because and then so the creditor determines how private or not the loans are. So the creditor determines what factors you keep out of the public eye and what factors you actually put out. So for instance, Nigeria, if you go to the debt management office website, anytime you go there, you would see how much Nigeria is owing to China, and you'd see who Nigeria is owing to as well. You know whether it's the Export Import Bank or it's the China Development Bank or whoever Nigeria as a country is owing. You would know that. But in some countries, this is not the case, and I think it's mostly because of the country. As it's not really China as much as the country. We've even had situations where, like, Western lenders. There have been cases like the Credit Suisse situation for Mozambique, where the country did not even know that they were owing a French investment bank money. So it's not just China that actually decides to be private. It's worth noting also that China, sometimes some Chinese lenders tend to be more private than others for reasons best known to them, but they would only be as private as the borrower country allows them to. If you come to me and you want to give me money, or if I go to meet you to lend me some money and you ask me to keep some of the terms private, I would only keep it as private. The lender would only keep it as private as the debtor wants to keep it. So it still boils down to the country that you're lending to.
Well, we did have that impression. We did have the impression that it was, the lender that determines the terms. And so if they ask for that, because, I mean, the other time there was a country, an African country, that had the issue of infrastructure being taken over by China or not. Do you know how that story ended? Because even in that one, it seems the terms were not made known, or at least not to the citizens. So that's why when that news came, everybody feasted on it.
Yes, so I'm guessing you're talking about Rwanda or Uganda.
Uganda.
Yeah. So there was a time when Uganda, there was some speculation that China was going to take over their airports, their international airports, because they were unable to meet their loan agreements. Now, the thing is, one of the terms, or one of the major characteristics, and you were right in saying that the lender determines to a large extent what the terms and conditions of the loans are. But then it's a negotiation, it's an agreement, right? If I don't want to keep some things private, like, you can't force me to keep it private, right? So they reach an amicable negotiation or an amicable resolution based on back and forth that goes on. So for Uganda,
Oh, wow. Seems okay.
Can you hear me?
Yes, I can hear you now. You were frozen for a bit.
Oh, okay, okay. So for Uganda, they actually debunked, like, China came, the government of China and, like, the lender, the Chinese lender at the time, actually came to debunk the myth that they were actually not taking over the airports. And even the Ugandan government did as well. The thing is, with many loans, right, especially Chinese loans, they're mostly securitized. And what that means is the debtor country usually puts down a collateral, either an asset that's existing or a future income from mineral resources sales. So an example would be an oil producing country can, set up an account where they pay, proceeds from their crude oil sales into the accounts. And then China has access to that account in the event that they default on their loans. So this account is just collateral. And then some countries also put down assets, right? They put down, some of their maybe, and they can put down an airport. I'm not saying that this was the case for Uganda, but it's possible that they do that just as a form of collateral. Now, it's very rare. There are very rare cases where China actually proceeds to take on this collateral. What happens if the country is unable to meet their loans or meet their debt payments is that they reach an agreement to restructure the loans. So what China usually does is restructure the loans. If it was supposed to be a 10-year loan, they can extend the time, they can extend the period to maybe 20 years or more. They can sell, they can repackage the loan, they can increase the interest rate, they can give some moratorium so you don't have to pay for some time. There's a lot of restructuring that actually goes on before China actually, or the lender actually decides to take on the assets. So even though, those are like, the terms would state that, you have to put down something as collateral. Now, whether or not you disclose that you've actually put that down as collateral, it's up to you, the lender, the debtor, and whatever the lender wants you to do. But then it's very rare, again, like, these are just like speculations based on what the terms actually say, but it's rare to see a situation where China actually goes on to take on ownership of these assets.
All right. Well, so help us. Thank you for helping us to clear that. Then the Belt and Road Initiative, we know it's a wide initiative, when it comes to Africa, even Nigeria, there was a part of it. But in the midst of all the harsh economic realities, at a point we heard China wanted to pause it, and all of that. But where is that now? And I don't think that's by the government, right?
Yes. Yes. So it's the Belt and Road Initiative. It's an initiative by the Chinese government to expand, its transportation links across the world, to allow for ease of trade, exports, imports, and all that. And it's signed by over 140 countries across the world. And what usually happens is China basically reaches an agreement with them, supports them with funding, to build whatever transportation infrastructure, whether it's the rail lines or ports or roads within the countries, just to ease movement of people and trade across these countries. Now, in Nigeria, so far Nigeria has benefited significantly. Some of the rail lines that have been rehabilitated, the Lagos Ibadan rail line, Kaduna Abuja, different rail lines and different train infrastructures and rail infrastructure that has happened in Nigeria has been under this Belt and Road Initiative. Now, sometime in between 2020 and 2021, as a result of a lot of countries entering into debt distress, China had announced that it would pause on financing some projects in Africa. However, this seemed like a temporary pause. It didn't seem like something that would go on for a while. And that's because, many African countries are nearing debt defaults now. And China has, in 2020 and 2021, there was already some debt restructuring for countries like Rwanda, Zambia, and some other countries. Even this year, China has offered debt relief to Zambia and some other countries, the 17 countries that you mentioned earlier. So it's very understandable if they want to take a minute and pause on, funding projects, especially because these countries are going through a rough patch right now, and repayment of these loans would be harder than usual. So that's most likely what's causing the pause. However, there's no announcement that they would stop funding at all. Right now, the Belt and Road Initiative is still very much alive, but they might just take a step back just because of the current fiscal situation in many countries.
So do you see Nigeria making that list of 17 countries that may be forgiven?
So the thing is, the loans that are forgiven are loans that were due in 2021, and they are interest-free loans. So the interest-free loans under the Belt and Road Initiative are some of them are loans that have already been restructured. So I mentioned before that when a country is unable to pay back their loans, what China has done in the past is actually step in and sometimes even eliminate interest rates. Say, these loans are now interest-free, and extend the payment period. Nigeria has not defaulted on any of its loans, either to China or to any other creditor at the moment. So it's unlikely that a loan that was due in 2021, we would still be holding on to it and not have paid back. So because the terms, we don't know which countries are beneficiaries. We don't even know what the value of this debt relief is yet. But based on what we know, the debt relief is for loans, interest-free loans that were due in 2021. It's unlikely that Nigeria will be a beneficiary because we haven't defaulted on any loans. We haven't restructured any loans with China either. So I don't think Nigeria is. In fact, I don't know, but it's possible. It's highly unlikely that Nigeria is part of.
Yeah, but when you talk about countries defaulting and all of that, we do know the debt stock of Nigeria now is really high. What do countries stand to lose? Because what if a country decides, let me just default so that I can get forgiven? What do countries stand to lose when they default their debt payment?
So it's for a country to decide to willingly default. That's no longer a default. That's their own willfulness to not to default to default on the loans. And what happens in such a situation is they actually get penalized for it. So between 1994 and 1998, the Abacha administration actually willingly refused to pay Paris Club loans. So we had the money, but they just refused to pay. And that was because it was some sort of retaliation to sanctions on Nigeria based on human rights violations and things like that. What this resulted in is, in those 4 years, as a result of not paying those loans, there was an accumulation of interest payments, there was penalties for not paying, and everything amounted to $4 billion. So that's what happens when a country willingly decides not to pay. You would be sanctioned, you'd be saddled with a lot of penalties. Interest payments would keep accruing on those loans, and you would just keep accumulating more debt. So the debt would not go. However, for many countries now, what we've seen is that there has been some decision to negotiate these loans. An example is Zambia. Zambia has been in a serious debt distress throughout the year, and they have sat down with their creditors. They have sat down with, they've met with the IMF and World Bank to discuss with the Paris Club. They've met with China as well. They have gotten to the point where they're like, you know what, we cannot service these loans anymore. We don't have the money. So please, if you can eliminate some, if you can waive some, that would be great. If you can restructure some, that would be great. Another impact of this, so this is not them deciding not to pay, but it's them actually reaching an amicable agreement, which in many cases they actually reach, and some of the debt is actually waived, like in the case of Zambia. However, what then happens is, because you have branded yourself, it's almost like a communication, like you're telling the world that I can't pay any loans, so don't even give me loans. What happens is the number of creditors that these countries are exposed to becomes a lot smaller. So loaning money is an investment. People decide to give you money with the hopes that they would get interest in return at a later date, right? So when countries actually come out and say that they're in a debt distress, they can't pay loans anymore, they're defaulting on loans, they eliminate the number of countries that will be willing to give them loans. That reduces, the list reduces. They then have to rely on the likes of the IMF and World Bank, to help them. When the IMF comes to give you money, they come with terms and conditions. They expect that the loans that they're giving you would, they expect the country to, implement some fiscal restructuring or fiscal measures that would prevent them from being in another debt distress in the short term. So what they do is they ask you to sort of reduce government spending, remove subsidies and things like that. And this obviously hurts the country in the short term, but in the long term, it's good for fiscal discipline. And I mean, that means that the country would actually have, so that's another downside to actually branding yourself as being in a debt distress or something like that. So the country would have to, take these measures. Another thing is the country actually gets excluded from the capital markets. So one of the ways that we lend, especially in Nigeria, for instance, is through the capital market, the international capital market, through Euro bonds and things like that. For instance, Nigeria's current debt stock is 40% of our current debt stock is owed to the capital market. So when you come out and say you can no longer lend, and capital market is basically like institutional investors, investment banks in the US, in the UK, giving you money. They're all about their profits. They're not in the mood to, they're not like the IMF. They don't care much for your fiscal discipline and all that. They just want their money, right? So one of the ways that they encourage investors to, invest in interest in your Euro bonds and buy your Euro bonds and lend you money is through credit risk ratings, right? When your credit risk rating is low, if you say you can no longer pay debt back, your credit risk rating will be low. And when your credit risk rating will be low, at some point, your bonds will become junk bonds and you'll just be eliminated from the capital market. Nobody wants to buy a loan or wants to buy a bond that they are not sure they will get back.
They'll get some money, yes. So that's true. I mean, because when you talk about the condition that IMF will give, I think Egypt is in a dilemma now because they're being asked to devalue their currency again. I think they just did it in June. So, and that's one of the conditions they are giving them if they are going to be able to get anything from IMF. But that was very enlightening. Thank you so much, Gbemisola Alonge.
Thanks for having me,
Senior
Amy.
Development Analyst with Stairs. Enjoy the rest of your day.
Thank you, Amy. You too.
All right, so that's it. If a country decides to willingly default in their debt, and we remember Russia, or their bonds were rated as junk, and we know what that means, the implication of it, but we can see that Russia is forging forward against all odds. Well, let's take a break now. After the break, we'll head to AFEX Commodities Market. Well, how was trading in a week? We'll find out. This is Business Morning on Channels Television. It's AFEX time on Business Morning here on Channels Television, and the market commodity summary for AFEX Exchange for the weekend at the 5th of September has sustained that red color it had this time last week. The number of volume traded slashed the most, over 89%. We have a Motola Kongwe analyst with market and data research analyst with AFEX joining us from our Abuja studio. Hi, Omotola, good morning, and thank you so much for joining us. Tell us what's going on in the market. We see a lot of red colors.
Good morning. Good morning. It's good to be here again this morning. So it was mostly a bullish run across most of our indicators this week. Our total turnover increased by 2.82 times from total of 0.45 billion naira to 1.27 billion naira. Also, our total volume of contracts traded on the exchange increased by 4.28 times, moving from about 723,000 contracts to about 3 million contracts. The number of deals, however, fell by 13.1% from 252 deals to 219 deals. The FX commodity index increased by 3.38%, moving from 439.48 points to close at 454.35 points. The FX export index also increased by 0.92%, moving from 185.29 points to 186.99 points. Across our volumes traded, the volumes of contracts traded for maize, paddy rice, sorghum, soybean, cashew, and wheat increased compared to the previous week. Across our price, the price of clean sorghum increased by 1.05% to close the trading week at 298.65 naira per cup. To close the trading week at 298 naira 0.65 kobo. Also, the price of clean sesame also increased by 5.06% to close the trading week at 830 naira. The price of maize, however, declined by 0.11% to close the trading week at 293.49 naira. Also, the price of paddy rice declined by 1.58% to close the trading week at 260 naira 0.81 kobo. For more information about our commodity or about FX, kindly visit our website at africaexchange.com, and to join our trading platform, you can download our app ComX. Also, follow us on our social media platforms at ComX by AFEX. Thank you.
All right, Omotola, thank you so much for that analysis. Still with AFEX now, we talk about weather. It's a great factor when it comes to do with commodities market and, of course, production. So what's currently happening with the commodities market when it comes to the weather? And does 2021, 2022 have the same scenario in the commodities market? We have Suleiman, Senior Analyst, Structuring and Origination with AFEX, joining us to have that conversation. Good morning, Suleiman. Thank you so much for your time this morning.
Good morning, and thank you very much. I'm delighted to be here.
All right, so where are we now since the beginning of the year on the commodities market? Of course, we're talking about weather and how it's affecting production.
Okay. So when you look at commodities market in the year, I think at the beginning of the year, the prevailing condition was the COVID-19 pandemic and its lingering effects. Then we had a little bit of supply chain strains, and also some climatic events were already pushing food prices up when Russia invaded Ukraine in late February. So what happened then was the war pushed price to unprecedented levels, but this has since abated, and this might be due to a deal signed on July 2022, which was intended to free approximately 20 million metric tons of grain stocked in the Black Sea ports. And this has brought some relatively relief to the market, enabling the price of cereals to return to pre-invasion levels. So another important indicator to look at is the FAO Food Price Index, which is the benchmark for the global food commodity prices. And it has declined for the 5th consecutive month now. So it declined by about 1.9% between July and August 2022, although it remains about 7.9% above its 2021 level. So although prices has declined over the past 5 months, it's still significantly higher than what it was at the same time last year. So and when you look at the FFPI, there are 5 sub-indexes of it. We have the cereal, we have the vegetable oil, we have the dairy, we have the meat and the sugar price indices. And a common theme that we notice among all these indices is a sharp and consistent drop in prices over the past 4 to 5 months. And this reflects the larger index. However, they are all still significantly higher than the price level recorded in 2021. So, and when we analyze some of the trends to look out for in the new production season, the most important one to look out for is the effect of the war on Ukraine production levels. As we all know, Ukraine is one of the largest producers and exporters of grain in the global markets, and projections for the 2022-2023 harvest season are currently below the 2021 levels. Another trend to look out for is the protectionist policies of some major exporting countries due to the fallout from the war. So we noticed that the lingering effect of the pandemic, the supply chain problem, has led to many of the largest exporters in the commodities market instituting export bans and export licensing requirements. Another thing to look out for is the rising input costs, which is very, very important, especially fertilizer prices, which has remained at high levels throughout the year and is already causing some farmers to use them sparingly in their planting season, and this may affect production numbers. And the most important thing, as you said, the recent weather event across the globe, especially the recent heat waves in India and China, which are 2 of the largest producers and market for agro-commodities in the world. And these waves are further worsened by the current dry summer being witnessed in Western Europe and some part of the United States. So all these weather events could limit the supply to world market by more than 10 million metric tons of grain
Wow.
during the production season.
So grain seems to be the most affected, especially when you talk about a country like Ukraine and the issue of wheat. Are there other crops other than grain that have been affected that much with all of this?
Okay. So when you look at in terms of the crops that are being affected due to the weather in the world, you have to look at the 4 main diets of human being depend on, which are rice, wheat, corn, and soybean. So they make up almost half of the calories of an average global diet. And 60% of global food production occurs in just 5 countries: China, the United States, India, Brazil, and Argentina. And these are some of the countries that are battling the worst effects of adverse weather conditions. Let's take China and India, for example. They are the largest producer of paddy rice in the world, with India being the largest exporter of these commodities to over 150 countries. The drought conditions that is currently being experienced by these 2 countries will severely affect the yield level of rice in the world. So, and global rice supply is currently projected to fall by 4.1 million metric tons to 697.3 million tons in 2022. And this is primarily due to the reduced production in Pakistan. If we, as we've been saying on China's news, you can see Pakistan are currently experiencing one of the worst flooding in history. About 70% of the country is overrun with flood currently now. So Pakistan, Bangladesh, and India, the 3 of them are one of the biggest producer and consumer of rice in the world. So the China drought has also affected about 1.2 million hectares of land along multiple provinces in China, and most of these provinces affected are the important rice producing area. Another crop to take note of is wheat production. As a result of the continued rainfall shortages across most of the European Union, we are seeing shortfall in wheat production in the world. And also France is expecting their corn harvest to be 20% lower than in 2022 due to record-breaking hot, dry weather. And when you now go to the southern corn nations of South America, we are also witnessing overly arid conditions and threatening nearly half of world soybean production. So a shortfall of more than 80 million tons is expected in soybean production in 2022, with Brazil soybean production already down by 7%, Argentina by 9%, and Paraguay by 37% when you compare it to their 2021 level. So bringing down to Africa, especially in Northern and Southern Africa, we have seen reduced cereal output in this country. In East Africa, persistent rainfall deficits are sharply curbing production prospects and have already caused extensive animal deaths in 2022. This is mostly notable for food security implication because most of these countries are mainly pastoralist countries. And when you now think of West Africa, Nigeria inclusive, production prospects are a little bit uncertain for 2022, which this is due to the worsening internal conflict in most of in this region, and also an uneven start to the rainy season across the region.
So it doesn't look like 2022 will be a repeat or a similar scenario with 2021, at least if for nothing else, there was no war in Ukraine last year.
Yeah, so it's looking a little bit grim when you compare it to last year, because Ukraine harvest levels are projected to fall by more than 30 million tons, which represents about 30 to 45% drop from last year level. And the main reasons for this are the reduced harvest area due to the ongoing military actions. And when you also look at danger from landmines across various farming communities. Also, most of farmers that planted for the last season, they are unable to ship a large part of last year's harvest. And this has reduced their liquidity. Another thing to look out for is the decreased yield due to reduced access to fertilizer, disrupted timing of planting, and less advanced plant production, and the ripple effect from increased diesel and fertilizer costs. So when you move from Ukraine, you go to the other side, which is Russia. There is likelihood of good harvest in Russia, but the yield might be lower in upcoming season due to the global trade restrictions that Russia is currently facing. And also vital resources such as hybrid seeds, plant protection products, and to a lesser extent, machinery and software might be subject to import bans, primarily impacting wheat output. So when you now move from these two countries that are currently engaged in this war, you go to other countries, fertilizer shortages is still rampant, and this high prices is expected to reduce yields in countries that depend heavily on fertilizer imports, mainly Brazil, and this will likely further decrease the volume of grain in the world market. So another thing to look out for is what other exporting countries are doing. This can either add more grain to the global supply or further reduce it. On one hand, continued or even further trade restrictions, as we've currently seen since the war started, might further exacerbate global scarcity, while high harvest and loosening of reserves could dampen the impact. So climate events, as I've already highlighted, may also affect the delicate balance. So currently, we don't know this scenario that will prevail during the season.
But I mean, I think it looks different from what we had last year in many aspects. Thank you so much, Suleiman, Senior Analyst, Structuring and Origination with IFEX. Enjoy the rest of your day.
You too. Bye-bye.
All right, so that was IFEX, and in just a moment, we'll head to the markets. Welcome back. It's time for the markets now. We have Anite joining in. Now, Anite, the equities market is still profit-taking, but I'm not moved because we saw something worse than this last week, and yet it ended in the positive.
Exactly. But it's interesting to know that it was by a deeper margin. The market lost about 186 billion naira, which translates to about 0.69%. At the same time, the unlisted securities market also joined in that bearish trend. It fell by 1.26%, as well as the fixed income market. So it was basically a bearish market.
But unlisted securities, I know even when they fall, or they always try to hang on to that 1 trillion naira market cap.
Exactly.
You know,
it's still, it's just slightly below the 1 trillion naira level. So
I'm sure they'll get it back maybe at the close of trade today.
Exactly.
But I think you have another conversation. today.
Yes, it's a different conversation. This time we're focusing on the Lagos Free Zone Company, which is expected is at the moment doing a listing today. So now we will be talking to the Chief Executive Officer of the company. Now, now the Lagos funding, the Lagos Free Zone Company, the LFZC funding SPV, is set to raise finance through the listing of debt securities, which would be used to boost the company's business expansion, exercise, and restructure its debt over a specified period. So now we will be joining, we'll have joining us via Zoom, the Chief Executive Officer of the Lagos Free Zone Company, Mr. Dinesh Rathi. So he'll be joining us right now. Thank you for joining us, Mr. Rathi.
For having me on your channel today.
It's a pleasure. Now, I'd like to ask, what are the details of this listing by the company? Can you give us a species on this, the details of this listing?
Yeah, so this is Series 2 of our 50 billion Naira bond program. And this Series 2 comprises of 25 billion Naira. And it was oversubscribed by about 15 investors, comprising mostly of pension funds and institutional investors. So this is a 20-year bond. It's the longest tenor corporate bond in the history of Nigeria debt capital markets.
All right, so now let me ask you again, who are your primary target for this bond? You mentioned, I heard you mention the institutional investors, but at the same time, is it just the institutional investors, or do you also have the individual investors or the general public? Who are your targets for this listing?
So given the tenor of the bond, which is 20-year, the appetite currently rests with the likes of pension fund managers and some of the other institutional players who are willing to take up that tenor, that kind of long-tenured bonds.
Now, I know this listing is, I would call it, maybe might call it historic. I don't know for you, but what are the expected outcome on this listing by your company?
So after the listing, what the key intent for us was to provide visibility and liquidity for all our investors and create a trail for us for the near future. As I said, this is a Series 2 of our 50 billion Naira bond program. That is the current bond program. And as we continue to invest and grow our free zone, we would be in need of more debt capital. So that's the intent with which we have got this program listed, this time on FMDQ.
So far, your business, you're targeting a business expansion. What's the current level of the of your business? How is your business at the moment?
So the Lagos Free Zone is a special economic zone located 60 kilometers east of Lagos in an area called Lekki. And we are deeply integrated with Lekki Seaport, which will become operational by end of this year. The zone is embedded with warehouses, standard factories, well laid out roads, drainage systems. We also have our own police station, fire station, medical facilities, a truck park, making it a fully encompassing ecosystem, an industrial ecosystem. And currently we have got at least 23 players who are registered with the likes of Kellogg's, Dano Milk, BASF, Sana Building Systems. These are the operators who are present in the zone. And the intent is to continue developing and operating this free zone. And we believe that once the port becomes operational by the end of this year, and once we have piped natural gas, which will be in the zone by early 2024, once we have those key enablers for any industry to grow and thrive, I think once that happens, we will see an upsurge in terms of our offtake. So we have to be ready to invest more and more to develop industrial ecosystem, industrial buildings, warehouses, standard factories, residences, commercial offices. So that kind of a setup needs to be developed to give it a shape of a complete industrial and logistics city.
Okay, so thank you for that, and then we wish you a happy listing today as the day proceeds. So that
Thank you very much. for the good wishes.
Okay. That was Dinesh Rathi, the Chief Executive Officer of Lagos Free Zone, who was just speaking to us about the listing of the LFZC Funding SPV PLC on the trading floor of the FMDQ exchange. So, that's it for the market. But tomorrow we'll give you much more details about our usual markets, the equities, as well as the fixed income and the unlisted securities markets. All
right, Anisi, thank you. We'll certainly be looking forward to that. So now let's go to another market. Of course, that's the crypto market. And looking at that market, it doesn't look like the fear greed index is abating. It's not looking better than yesterday. We still have the fear greed index still standing around extreme fear. If we could have that, there you have it now. It's 24. I think this is almost like what we had yesterday. Yesterday, I think we had about 23. So it's still extreme fear and not very good times in the crypto market at this time. Market cap is down today, minus 5.78% at $938.08 billion. 24-hour volume is more, 86.22 billion. Bitcoin dominance is just slightly higher than yesterday, 0.18% today. There you have it. The price of Bitcoin, oh my world, very heartbreaking. It's now 18,785.27, and that's minus 5.11 compared to yesterday. 24-hour volume is 41.73 billion. There you see it. If we see the price of Ethereum not looking better, I would say it's also less, 8.39 compared to 24 hours from now, 1,518.88. 24-hour volume, 21.64 billion. If we see market cap, top alts by market cap, all in the red, all in the red, all in the red. BNB, Cardano, eCash, XRP, all in the red. Not looking nice. Cardano seems to be the worst hit, almost 10% down compared to yesterday, minus 9.49. And BNB minus 6. Okay, so let's have the next one, the top gainers. There you see it. The gains, well, we have HNT with 3.06, Leo 0.53, and then the others are really marginal. Imagine you have a stable coin there. And then the top losers, we have ETC, LDO, and there you see where the double digits are. They're in the losers' corner, so it's not a very good time in the market. We have Solomon Amunde, supposed to join us to have a conversation about the market. Hi, Solomon. Good morning.
Good morning, Ini. Good morning.
Even Solomon is not sounding right, Solomon. The market is this red and you're sounding this way. Has the market gotten to you?
No, not really, not really. It was actually expected, see the market this red this week. It was very much expected. I mean, we've been testing the support for a while. Almost 2 weeks now, we've been playing around the support, and it was only a matter of time before we go below it. So it's very much expected, though.
You're good. All right, so it's looking at Bitcoin now, the dollar continues to rally. And obviously, is that part of why we're seeing this much red in the market? We see the losers in double digits all around.
Yeah, the dollar rallying is why we're seeing the market red, though. The dollar is rallying because of the Ukraine and Russia war, which is also affecting so many other economies, and it's not really affecting the U.S. economy. That's why the dollar is actually appreciating against other currencies. But the market going down is basically because of fundamental analysis, and also because we've been on a downtrend for over 3, 4, 5 months now. I mean, officially we are in the bear market, and all we've been waiting for something that can serve as a booster to see if the markets can recover. And all everyone has been looking out for is the Ethereum merge, which is actually this month. So most traders are hoping that the Ethereum merge could kind of give the market a small push and let us see a bit of green maybe before the end of this year.
Yeah, that's Ethereum merge. We also see might be a competition to Bitcoin, but I mean, some people think otherwise. But Solomon, thank you so much for sharing your thoughts with us. We do hope that the market can brighten a bit, so your mood, your mood and your voice will be a bit brighter. But thank you so much, and wish you a great day ahead.
All right, thank you.
All right, so don't let the market get to you right there, because if you invested there, it will come up. It will come up. It's a cycle, we do hope. Well, that's it on the program. Thank you so much for being a part of it. Been an interesting 55 minutes or so. We have 30 minutes coming up at Business Incorporated. That's at 1:30. I'll be back to give you an update from the world of business. But for now, enjoy your busy business day until we meet again at 1:30. I'm Ini John Mekwa.